Welcome to the Monkey Stock Club. For those who are new at this channel, my name is Monkey B. I love to go out there and finding nice stocks just for you. So all you have to do is just watching this entire video and decided if the presented stocks could be something for your portfolio. It doesn't get much easier than that. In return to all my preliminary research and hard work, I would really appreciate it if you would drop the subscribe button to become part of the Monkey Stock Club family, so you will never miss a video again. Also drop the like button if you enjoyed the video, so that helps the YouTube algorithm to push my video. Please be aware that everything I say here is just my opinion and no investment recommendation. As you can see, I'm just a monkey and not an investment banker. Nevertheless, I have pretty nice analysis tools to value stocks and I want to share all the exciting stuff with you. And honestly, how do you feel when you are told, just look into Yahoo Finance and build your KPIs to evaluate a company? I think most people are scared off, and most of all it is a hard work to collect all the data. But don't worry, I'm there to do the groundwork and show you only the interesting results, so you can do the cool stuff. Please stick around for the entire video, so you don't miss any great chances to make big money. So, don't waste time, and let's get started with some numbers. So today we're going to talk about CrowdStrike. CrowdStrike Holdings Incorporated is a holding company engaged in providing cloud-based solutions for next-generation endpoint protection, offering cloud modules on its Falcon platform through a SaaS subscription model. It operates across domestic and international geographic segments. The company's services include incident response services, proactive services, tabletop exercises, adversary emulation, cloud security assessment and blue team exercises. The company was founded on November 7, 2011 by George P. Kurtz, Marston Gregg and Dmitry Alperovich and is headquartered in Sunnyvale, California. In the first step we will use the high-growth investing strategy. It is a long-term oriented strategy for stock picking of growth companies. The high-growth investing strategy uses 6 key figures, which are suitable for filtering out the outstanding companies from an investment universe of fast-growing companies, even if they are not yet profitable. So we start with the high-growth investing strategy. First, an HGI score is calculated for each share according to a simple points system. The HGI score consists of 6 criteria for which 0 to 3 points are awarded. In total, a share can therefore receive a maximum of 18 points. And we start right away with the first KPI. Enterprise value divided by sales actual. Enterprise value is a measure of the value of a company regardless of its financing. If you divide the enterprise value by sales, you get an important ratio for estimating the valuation of fast-growing but still loss-making technology companies. 3 points are given for values less than or equal to 8. 2 points for values greater than 8 and less than or equal to 10. And 1 point for values greater than 10 and less than or equal to 12. CrowdStrike has an enterprise value divided by sales of 50. Therefore 0 points as the value is bigger than 12. The next KPI is the gross margin trailing 12 months. It results from the sales minus the direct costs divided by sales. The gross margin provides a good indication of the profitability of a business model. The higher the percentage, the more money a company has available for sales, marketing, research and development and capital. 3 points are awarded for values greater or equal to 75%, 2 points for values less than 75% and greater or equal to 65%. And 1 point for values less than 65% and greater than or equal to 50%. CrowdStrike has a gross margin of 73%, 2 points, because the value is between 65 and 75%. The next KPI is the Rule of 40 score trailing 12 months. The sum of sales growth and free cash flow margin is calculated. The Rule of 40 is a simple key figure for assessing the efficiency of a company's growth and thus the quality of its business model. The higher the value, the better the business model of the company. Values above 40 are considered attractive. 3 points are awarded for values greater than or equal to 50%, 2 points for values less than 50% and greater or equal to 45%, and 1 point for values less than 45% and greater than or equal to 40%. CrowdStrike has a Rule of 40 score of 118%, 3 points as the value is over 50%. The next KPI is the sales growth trailing 12 months. 3 points are awarded for values greater than or equal to 40%. 2 points for values less than 40% and greater or equal 30%, and 1 point for values less than 30% and greater than or equal to 20%. Below on the IMAX screen you can see the sales growth of both companies over the last 3 years. CrowdStrike has a sales growth trailing 12 months of 86%. 3 points for this as the value is bigger than 40%. The next KPI is the debt ratio. The debt ratio results from the debt last quarter divided by equity last quarter. A debt ratio less than 1 indicates low debt, while a debt ratio greater than 2 indicates possible risks from debt. There are 3 points for values less than or equal to 0.5, 2 points for values greater than 0.5 and less than or equal to 1, and 1 point for values greater than 1 and less than or equal to 1.5. CrowdStrike has a debt ratio of 0.05, therefore 0 points as the value is below 0.5. The next KPI is the PEG trailing 12 months. It is calculated by dividing the price per earnings ratio by the profit growth trailing 12 months. The PEG is one of the most important key figures for the assessment of already profitable growth stocks. If this ratio is between 0 and 1, this indicates an undervaluation. The PEG can only be calculated for companies that are already sustainably profitable. There are 3 points for values less than 1 and greater than 0. 2 points for values greater than or equal to 1 and less than 2. And 1 point for values greater than or equal to 2 and less than 4. The PEG of CrowdStrike is not available. Therefore 0 points. In total, CrowdStrike reached 11 out of 18 maximum points. CrowdStrike is moving forward in leaps and bounds, fueling impressive growth through savvy technology acquisitions like Preempt. But let's be clear, CrowdStrike is almost outrageously expensive with F/sales ratios of 50 and could also go onto the bus in the event of another cloud stock correction. Nevertheless, I want to remain invested in CrowdStrike at least for the long term. That's because I think the cybersecurity market will be redistributed more rapidly than almost any other software segment in the coming years. And I am optimistic that CrowdStrike in particular will grow into its sporting valuation. That was it from my side. I hope you enjoyed the video. If so, then drop the like button for the YouTube algorithm. Press the bell to get a notification when I release new content. And please drop the subscribe button and become part of the Monkey Stock Club family. So have a nice day and hopefully we will meet again. Bye bye.